Hey everyone and welcome. Recently we have had a lot of news around Bitcoin, crypto, regulation and so on. We have an obvious inflation problem, we have economic uncertainty, not to mention that we are also approaching the next Bitcoin halving. I also want to talk to you about some price targets, so let's not beat around the bush and jump straight in. Since the start of the year, Bitcoin has gone from about $17,000 to almost $29,000 in the span of 3 months. That's a jump of 70%. Most of this jump happened directly after the banking crisis. Between 10th of March and 19th of March, Bitcoin moved from $20,000 to $28.4 thousand. Now, a lot of people say this. Bitcoin is an alternative to the traditional fiat money. So, when we have problems in the traditional financial system, people flee to the alternatives. Bitcoin jumped, gold jumped, silver jumped. That's obvious. Yet, it seems that CZ, the CEO of Binance, was actually dumping a lot of money into crypto. The exchange moved $1 billion worth of Binance USD to Bitcoin, Ethereum and Binance Coin. Meet Kevin recently made an interesting video about this, and I recommend you watch it. You can find the link in the comments below. The short summary of the video is this. Binance now controls a very big part of the Bitcoin volume traffic, hitting about 80%. Now, that makes sense because Binance is after all the biggest exchange. Everybody knows it, a lot of people use it, and most importantly, Binance doesn't have any fees on spot trading Bitcoin. Still, there is an obvious problem there. Kevin shared some intriguing research. Essentially, having a single crypto exchange own the majority of Bitcoin traffic opens up Bitcoin prices to manipulation. Now, I cannot say anything for certain. A lot of people like Binance, a lot of people hate it. Still, this is something to think about. Binance is not a non-profit. The management are not altruists or philanthropists. They are businessmen. It is completely possible that there is some dodgy dealing going on behind the scenes. Even more so, given that crypto is not regulated. Did CZ bump the price of Bitcoin in March? Let me know what you think in the comments. Now, the banking crisis may have settled down a bit, but the central banks have not fixed the underlying problems. The Federal Reserve, the Bank of England, the European Central Bank, they all raised interest rates. Higher rates mean devaluing the existing government bonds, which a lot of banks and insurance companies hold. This means more stress on the financial system, more fragility. There is still plenty of time for things to go wrong, even though it seems that things have settled down a bit. This may or may not be an immediate problem, I am not sure. We can see that normal banks and central banks are trying to contain this. So far, it looks like they are successful, although there may be some problems with Deutsche Bank. Only time will tell. If investors decide that there is no longer any danger with banks, we could see some money moving back to the traditional financial system from crypto. That's a speculation, obviously, but it is possible. Other big news that we saw recently was the SEC moving against Coinbase and serving them a Wells notice. Essentially, the SEC told Coinbase to expect some sort of legal enforcement action. Now, Coinbase says that they have been doing everything they can to be compliant, to register with the SEC, to do things the right way legally. SEC did not seem to care though. This is very intriguing because Gary Gensler is a crypto guy. He was teaching a course on blockchain and money in MIT. People thought that once he became the chair of the SEC, there would be some development towards making crypto mainstream, regulated, legit, and so on. That doesn't seem to be the case. Instead, it looks like the SEC wants to crush crypto exchanges. It's possible that Gensler changed his worldview after his involvement with Sam Bankman-Fried from FTX. However, this was a completely different situation. Coinbase, Kraken, these are legitimate companies run by actual professionals. They are nothing like FTX. Personally, I think it is something else. Ray Dalio has mentioned this a few times and has given some examples with gold. When the American financial system runs into problems, the government limits the outflow of money to alternatives. They have outlawed gold a few times in the past. Normal people like you and I, could not own gold. The government did this to keep money in the system and prevent any cracks. The best example happened in 1934 when Franklin Roosevelt ordered the confiscation of all gold and gold certificates held by individuals. Obviously, this happened 90 years ago. The modern equivalent could be the US government confiscating wallets on crypto exchanges. There have been a lot of efforts to limit money going into crypto. Naturally, they have said it is to protect customers, but we all know what it is. It has been happening in the US, it has been happening in the UK too. Banks either limit or entirely forbid transfers to crypto exchanges, government agencies make confusing legislation about crypto. Meanwhile, the talk about central bank digital currencies is growing louder. Basically, there is one thing that you can take away from this. Governments are feeling threatened by cryptocurrencies. I always find it funny when they speak about criminals using crypto crypto for money laundering and so on. They always try to taint the name of Bitcoin and so on. Yeah, there is some of that. Meanwhile, pretty much every big bank in the US and Europe has had billion-dollar fines for money laundering or trafficking. JP Morgan Chase has paid $36 billion in the last 23 years in 223 different settlements. Plus, they were involved with a certain individual who had an island and a certain list of people who visited that island. Then, Citigroup has paid $25.7 billion in 159 different settlements. Bank of America has paid $83.3 billion in 271 settlements. They are not the only banks to pay fines, but you get the picture. My point is that governments, banks, they're all going the extra mile to discourage people from getting Bitcoin or other digital currencies. That should make it obvious that there is incredible value in those. Governments tried to get rid of gold back in the day. They did it to some extent once Nixon removed the dollar from the gold standard. Now, they will most likely try to get rid of crypto in the coming years. That is precisely why it is crucial to keep your crypto protected. Remember, not your keys, not your crypto. Keeping Bitcoin, Ethereum and other crypto on exchanges is risky. If you keep doing that, there is a big chance you are going to get burnt in the future. Now, I know there is some appeal to keeping your crypto there. Even though I want to move my crypto to a wallet, I still have most of my crypto on exchanges. Well, one exchange. I use Nexo since they pay me interest on my fiat and crypto. Since I started using them, I've made over $1,300 in interest, and it took me about 2 years to do that. Not bad, right? If you want to check them out, see the link in the comments below. You can also get $25 worth of Bitcoin when you sign up and put $100 on the platform, then keep it for a month there. Obviously, Nexo is not FDIC insured in the US, it is not FCA protected in the UK. If they go bust, you lose everything. They also have the keys to your crypto, so bear this in mind. I don't have a lot of money on that platform, and you shouldn't keep a lot on there either. Alright, I meant to cover a lot more in this video. I wanted to talk about inflation, I wanted to mention Bitcoin halving, price targets and so on, but this is already getting too long. So instead, I am going to make a sequel in the coming weeks. If you find this video useful, make sure you subscribe, leave a like and share it with your friends. Thanks for watching and I'll talk to you again soon.